this demand, which has been taken out immediately on a monthly chart. All right? We took out this demand May 2018, right? We took out this demand, and going further, taking into the consideration the upper shadows, we can consider drop, base, drop this time, right? So in that case, based on the monthly chart, simple this demand, possible demand zone, simple didn't work out, right? So trying to trade this one, we would be stopped out. Okay. Now, there are two important things I'm going to point out right now. Two important things from my perspective. Because of such a move, of course, we have a supply at the top. Now, where is the supply based on your opinion? Where we are going to put the possible supply zone? What's your guess? Some may argue that this one, the price action happened on March 2018, right? And again, if that would be true, with supply, I'm not taking into the consideration lower shadows, just body and the upper shadow. But the thing is here, and that's what I'm trying, that's what is very important, and that's what I'm going to highlight. And I would say not everyone is talking about this stuff. We might not see these levels. We might not see this supply. I think that we have to get back into what happened January 2018. What happened in January 2018. And that was the break out of this base after Riley base Riley, right? So to be honest with you, I would take, because of this attempt to break higher, and because 5 months later, on May 2018, we closed lower, I would have a little bit different possible supply. First thing first, I would take into the consideration, and that's what I'm calling, and it's very important, and I told you last Tuesday that we are going to cover this time, game of the shadows. And there are gonna be few things today, so please listen carefully. I'm pretty sure few things you saw already, but it might be, for some of you, it might be the eye opener here. Eye opener here. And I'm going to try to prove that thing. Anyway, in that case, because we see that this Riley base, the base didn't work out, right? So I'm checking the breakout candle. In that case, based on the monthly chart, it was the January 2018, right? And after such a breakdown, after such a breakdown, I'm taking into the consideration the low and open, and of course, what happened at the top, the close and the shadow, right? So it looks a little bit different here, right? Now, what's going on with this zone, which were supposed to work as a demand? So after the breakdown, it also, we have to consider if something where we were expecting demand, right? Let's draw this thing. So if we did expect demand here, right? And market was strong enough to move through that demand, meaning that the supply was much bigger in that place. Right? So immediately we should expect supply where the demand was expected after the break lower, right? So in that case, I would make a little bit of the adjustment. In that case, I would take the upper shadow and the body, and I will work out with this zone as a supply, right? So as we can see here, I will make it a different way. As we can see here, right? Right after the breakdown, there was a 1, 2, 3 attempts to try to go higher, but I assume that because of that breakdown, right, the supply was strong enough here to push that price lower. Right? I'm going to take off this red color of the background. Here, 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 and here, just to avoid situation that if we are going to switch lower, we are going to have a like red color, right? Now, because of where we are right now, we have to get back into the previous supply. And if you agree with me, that's what we discussed before. If you agree with me that that was the supply before we break higher here, we agreed that that was the latest supply because we made new low over here, right? So we can call that as a latest, because we are approaching here, as a latest market weakness. Now, probably you've heard many times on CNBC, on Bloomberg, when their guys are telling us, oh, I'm buying this dip, oh, I'm selling this right, I'm selling into this rally, right? And for me, when I heard them before, for me it was okay, but man, tell me where you're buying on this dip or where you are selling into this rally, right? Oh, I'm buying the dip, I'm selling the rally. Now, and that should be for some of you eye opener right now. When we are talking about the supply which was taken out by this rally, right? So that's because of where we are right now. That's the latest market weakness, right? Meaning that this base rally. So this base here failed. So in that case, from the bulls perspective, from the people who are trying to buy euro dollar, we are looking on the monthly chart, higher time frame. We are looking another logical place where they might to try to step in and buy, right? So let's have a look. Now, because it was the latest supply which was taken out, now should work as a demand. So I'm not taking into the consideration upper shadow. I'm taking into consideration lower shadow. All right. Now, that's latest market weakness. And if someone is telling you that he is buying into that dip, you may to try to assume, based on the monthly chart, they are trying to take the advantage of the latest supply, where now, after the breakout here, we might expect some demand, right? And we are not going to discover America right now. There was a demand on November 2018. There was a demand on the February 2019. Demand. We are still working with this demand. All right, we are still working with this demand. So that's why it's so hard for euro dollar to break lower through 111 based on the monthly chart, right? So let's switch lower to the weekly chart. I'm sorry, and because we have to discuss supply here as well, right? We have to discuss supply here as well. Now, if we are going to take into the consideration the breakout of this consolidation, all right? So where is the breakout candle? Similar to this one we discussed previously, right? Is this one. This one, that's the breakout of the consolidation. So that was some kind of the demand, right? It was July 2017. So the same we discuss here. I'm going to take into the consideration lower shadow and open of that month, right? So now you may wonder why for a few months we are in a very narrow euro dollar range. Because where the possible demand and where the possible supply resides right now. Okay. The same way as I explained the latest weakness here. So based on current market level, we are looking for a latest strength, right? That was the strength. And because we went lower, we closed below. So that's where I do expect some supply. So let's switch lower to the weekly. What we are talking right now, we are looking both ways. We're looking for possible supply, for possible demand, right? Whatever your bias is, it's good to have plan B, meaning to try to understand where the opposite side resides, where you may expect some kind of the counter attack. All right? So let's switch to the weekly. That's even better here. All right. Weekly. Where is the, compared to what we've seen to the left, where we are, where was some kind of the demand supply? I think here it's not going to be mistake if we can call this as a Riley base Riley. It's not, I think it's not gonna be mistake. Right? Riley base Riley. Now we are still fighting around these levels. So what is important that we have a possible demand based on the monthly and we have a possible demand based on the weekly, right? So that's quite important. But the next lower level, it's what you've seen before I cleaned the chart, is here. And it starts at 110, psychological level, right? So I do respect this possible demand based on the monthly and weekly at current level, right? But I do have much more respect for this demand based on the weekly at 110 because of psychological zone at 110. So I'm not gonna be surprised, and I've been we were talking about this, and I've been trying to explain. I'm not gonna be surprised if we are gonna at some point to see spike lower, and eventually some kind of the rally of that level. Okay. Where do we have the possible supply based on this weekly chart? Because we know where the demand resides. So where we have some kind of the possible supply based on the current market level. To be honest with you, it's gonna be very, very tough to find this out. I see something here based on, but we took out this one. So on the weekly chart, on the weekly chart, I'm not gonna be surprised if we are going to take out, this looks like the late 2019, the week ending January 2019, this spike higher here, right? And relation to the yearly open. So that's where the supply resides, in my opinion. The closest one based on the weekly. And switch to daily. The daily we discussed many times. And usually that's what I'm watching at. That's what I'm looking at, looking for the supply demand. I'm looking on the daily, right? And now, because of the latest price action to the upside, again, we discussed it yesterday. Riley, base, Riley, right? So there was nothing extraordinary to trying to expect demand here, right? So over the course of the move lower, to expect the demand over here. And unfortunately, that's what I've mentioned at the very beginning. Because of the current market condition, again, didn't work out. Didn't work out. Let me close the window because of this noise outside. 1 second, please. And it didn't work out again. So what I'm gonna do right now, same with pound, and I've mentioned a few times, I've been hurt by pound lately. So if that was possible demand and it didn't work out, what I have to do? I do expect some supply, but that's the supply. White zone, very white zone. Now we are approaching the time where we are going to discuss some details. How can we try to narrow the range? Of course, the thing is that many times we are going to miss some trades, but trying to trade this supply with such a high stop, I think not necessarily could make sense. So we will go through more details after the short break. We are approaching short break, coffee, tea break. Let's finish euro dollar. So again, instead of trying to take into the consideration this whole day, in that case we are talking about the price action we've seen 5th of June. All right, I'm going to, so that would be, in case that would be, that's based on the daily, that white, right? That white. So I can try using all available tools to try to make it narrow. Of course, it might end up I'm not gonna be able to take the trade, but I can try to narrow it. Now, how can I try to narrow it? I'm going to use this breakout candle, right? I'm going to use the low and the open of that day to make it narrow, right? So that's gonna be my first possible supply. All right? That's gonna be the first possible supply. And I can try to make even more narrow. I can try to make it even more narrow, taking into the consideration what happened during the 13th of June, 14th of June, right? Now, as I mentioned, we are approaching the details, but let's try. The very low, after the breakdown, very low close, 14th of June, right? Compared to the low of the 13th of June and the breakdown level, right? So between here and here, we have some kind of the gap. We can call it as a gap. So very often, market will try to retest this breakdown. Market will try to close that gap. Okay. So what I can try to do is to try to narrow my possible supply. Right? I can try to narrow. Now, around this level over here, around this zone over here, I've got plenty of interesting things. Right? So this is the range, right? We might spend 3-4 days attempting to fight with the top of that range, right? We have the breakdown level. We have the level where market showed the strength last time. I think if we do expect supply somewhere in euro dollar, I'm pretty sure there is some around 1270, 1276 towards the high from the 14, 1289, right? So that's where I do expect. So from such a wide range, taking into the consideration all available tools I have, I narrow it as much as I could, and I do have my first possible supply based on the daily, right? So let's switch to the hourly and let's have a look what we have there. So taking into the consideration this price action, we do have drop, base, drop, right? But because of the yesterday price action, so that's possible supply based on intraday chart, which was taken out. All right. I do have previous post non-farm payrolls demand, which was taken out here. I do have this breakout post non-farm payrolls candle, right? So suddenly, it looks like I have some supply based on the daily chart, which I narrowed very, very much. And also I do have supply from the intraday perspective, where the part of the supply is included in that supply from the daily chart, right? So I like this stuff. Now we can try to make the final cleaning here. And usually if we are ranging, right, and if we can, in that case we are trying to break lower, but if we can double the range, right, taking into the consideration only bodies, right, only bodies, we see that even if we are trying to double that, we are gonna be around this supply based on the daily. So plenty of different tools we used here, showing that something closer towards 1270, 1280, we may see supply based on the euro dollar. Where can we expect demand based on the daily chart? Based on this attempt to drop and the rally higher, we do have some kind of the demand. Oops, sorry. We have possible demand over here around this swing low. Okay. Any questions? Especially in relation to the market weakness, market strength. The current move on euro dollar is based on what Draghi said. So I'm waiting for your questions. In the meantime, I will finish the basic stuff. So in case we are going to move higher towards this supply at the end, I know where we are, and I'm gonna to look for a possibility to execute based on the 5-minute chart, right? So let's have a look if we have something on the 5-minute chart over there. But it was already taken. So maybe we are going to create some Riley-based drop formation. the market is moving a little bit faster. Yes, that's true, but because of the Draghi, right? And I know it might be, some of you might be skeptical, but it's not the accident that Draghi has 3 appearances around the FOMC, right? So he had the appearance yesterday, today, and tomorrow as well. So he will, in case of the euro dollar rally, he will try to, make the verbal intervention. So the same way we can try to measure where we might expect eventually euro dollar, if we are going to go lower, where, right? Probably when we are trying to double that range, we have this intraday possible demand over here based on drop base rally, right? But I would be very careful with this demand. Why? Because it's intraday, market may want to look for liquidity. I do expect some stops below this level, and I would rather be careful and patient and wait for eventually intraday stop count, right? And eventually from the bulls perspective, that this type of the move, right? And we are going to discuss game of the shadows, how I'm calling the next part of our meeting. We are going to discuss swings and how we can use the knowledge we are going to get in relation to the possible supply and demand, and if we can take a little bit, if we can take the advantage of this and to be a little bit better off. Not always, but sometimes, right? So if there are no questions, let's have a short break, 10 minutes break, coffee, tea, right? Then we will cover the game of the shadows. Then we are going to have the lunch break. And then based on what we discuss over the course of the morning meeting, we are going to try to implement during the New York Open, and that's gonna be it. So we are on a break right now. You are more than welcome. Thank you. You are more than welcome to join me after the break. Okay. So it's time to start the second part ahead of the lunch break. And then again, after the lunch break, we are going to try to implement what we discussed here during the New York Open. Just few charts. All right. So what we are going to discuss here, we are going to talk what I'm calling game of the shadow. We are going to discuss swings but I'm going to add something special. I think that's what I discovered. So just a reminder, I can't see the chat on the YouTube, so in case you want to ask some questions, please join the webinar room. Let's start the game of the shadow. Now, there are many different schools, many different approaches into the swing trading. I'm going to share with you the mine own. Few things we are going to discuss right now, it's my own observation. Of course, some of the things we are discussing are not my own. I learned from someone, but here, in regards to the swings, the details I'm going to share with you, even if they are somewhere, I haven't seen them, it's my own observations. That's quite important as well. And probably, when we are going to discuss these things, it's going to be eye-opener for you, and you are going to start to think, yeah, I've seen this plenty of times. I've seen such a thing plenty of times. Anyway, let's go and check what we are talking about. So we are going to discuss swings. Let's switch to the smaller time frame. I need some space. We are too close to. Anyway, let's try to visualize. Swing high for me . We can do it a different way. Swing high for me is something like this, right? So we have a high, we have a higher high, lower high, right? That's the swing high for me. Some schools are saying that you have to have, before the higher high, two candles, right? High, high, higher high, and two candles to the downside to confirm the swing. For me, this is enough to call swing high. Now, of course, the question is of current price action in relation to the, not the latest, but the previous one candle. But that's what we are going to discuss as well. And opposite to the swing low, right? So that's the swing low. So let's have a look what we have on the charts before we'll go further. So let's grab 1 hour chart. And let's have a look where we are. So starting during this whole move to the downside. So we swing high, swing high, swing high. Next one, the most visible, another attempt to swing high. Another one and another one. Swing low. Attempt to create swing low over here. Attempt to create swing low over here. Attempt to create swing low over here. Another one. Another one. Another one. Another one. Okay. Now, of course, the swing low over the course or during the falling market got the completely different meaning than the swing high and opposite, right? The swing high has a completely different meaning than during the bull market than the swing low, right? And the best example is the current swing high on the Bitcoin, which has been taken out almost immediately, right? On a daily chart, as far as I remember. But anyway, so that's how it looks. And for me personally, the validation is for the swing high. The validation for me is when the falling candle close 50%, is trying to engulf 50% of this one candle, not the highest one, but the pre-high candle. So 50%, that's valid. But I'm going to talk to you in regards to the swing high in relation to the possible demand, possible supply. So not necessarily we are going to be interested in this 50% I'm discussing right now, because in many cases, having in mind what we are going to talk right now, trying to be sometimes a little bit of the front runner, I'm strongly in opposition to be in the front runner very often, but in some cases trying to be the front runner, especially if you know what you are looking at, if you know what you are looking for on the chart, might be very useful. Okay. So, what kind of the secrets are behind the swings? The most clear swing, the book example would be the one that if we are going to take into the consideration the candles one before and one after the high, the highs of these candles are equal. Now we might have here two different examples which are important from my perspective. All right. Hopefully you already spotted the difference. What is the close of the candle which made the high, right? And that's gonna be key thing here. That's gonna be key here from my perspective. It might work completely different for you, but at least I'm gonna to share with you what I'm using and what is working for me in relation to the supply demand. All right. So is the close of that candle which is making the high, right? I'm gonna be short hunter. I'm going to hunt for the short position in case of this example where the close of the candle which made the high, which the close is below at least the high of this candle. So let's make it again. We are going higher, and then we are creating, we don't know if we created the high, right? And we have the close like this, so just below the high, or better, we have the close below previous candle close. All right. And what is more important, that if I'm going to see this type of the price action, and if we are around this possible supply from the higher time frame, I'm going to wait for open of the next candle, rally towards this high to take the advantage of the short opportunity. Now, don't get me wrong. We are going to see plenty of examples like this on the chart, but I'm only interested to try to be front runner in case of the swing creation, in that case inside the supply, around the supply from the higher time frame, right? So let's check the chart. Let's check the 15 minutes. There should be more examples. Where we have some we already took out. I'm trying to find the examples based on the current market situation. Okay. I got it here. We are talking about this intraday demand based on this post non-farm payrolls rally, right? And I'm going to switch lower and we are going to discuss these things. Because I'm talking about the smaller time frame, right? Don't forget. So we have the possible demand based on the hourly post non-farm payrolls rally. Let's switch to 15-minute chart. Let's have a look what we have inside that zone. If there is anything, I will try to take the advantage of. Here. Here, right? Why here? Because of the close of this candle, right? We made new low, but we close compared to the previous candle. Right? Above. So the idea for me, and because we have also different things, right? We have demand based on the intraday and daily chart, right? Green color as well. We have a lower shadow, some kind of the demand, and especially here because of the close, looking for the low from the previous candle, 1272.1. That where I would like to buy the low over here, of course, plus spread 71.08. I would like to be filled based on the price we've seen here, 72.1. The low here, 71.8. So there was a possibility eventually, but what is the next important thing? My stop is not based on that swing. My stop is still based on the demand we've seen here on the hourly chart, right? On the demand we've seen here. Okay, so I would trade out this one from the 15-minute chart, but my stop would be here plus 1 in that case, right? So if there is a, let's say, 1254, 1253, right? The open was, so it would be something around 18 pips, right? Now, the key important question is, if I would take this based on the 3R ratio we discussed during the first part of this. So the question is, going back into the 15-minute chart, right? Seeing what I see here, taking this trade, if I have the space, if I'm going to have 18 pips stop, if I have a space for 54 pips rally, right? So let's have a look what we have. That was the non-farm payrolls rally over here. right? So what we have, how we are, especially how we are moving towards this demand. So we have rejection, right? Breakdown, right? Pullback consumed, right? Another breakdown, pullback consumed, right? So in that case, it doesn't look bad, right? So meaning that based on what we discussed during the first part of the session, that would make sense here, right? Because theoretically, we should have a chance to retest 1335, 1340, right? So based on the 70, it's like 60 pips to the upside, some kind of the also range possible, right? The only one thing, and we were discussing this in details, the only one thing it would make me scary, and in that case, and I wouldn't trade this because of some kind of the hesitation, would be just not to trying to confuse you, but we were talking this stuff very often during the previous week. It was this supply base on the daily chart, right? It was this supply base on this, and it was rather looking for a short opportunity, right, than looking for buy opportunity. And if you are going to get back into the archive section here on the Light Forex Global YouTube channel, we were discussing this also during the non-farm payrolls, right? So that was rather the short opportunity than the buying opportunity. But anyway, that's how I'm approaching, right? The decision point. Let's get back to the swings. So this one, anyway, would end up with the stop, right? Because we are trying to rally of that level over here. The bounces were so weak, right? And that's where the point is. That's where the point is. Because of the rally after the non-farm payrolls, because of the expectations that maybe Fed will cut, right? One could try to approach this zone and could try to trade it with the bias to the upside on euro dollar. But again, we have three different traders, right? Different. Trader number 1, trader number 2, trader number 3. And that's the important thing. That's what I already told you during the first part. The first trader, because of the bias to the downside, wouldn't use that one. Rather, would use this to take some partial profits from the shorts, right? The second and third trader, they are going to take the advantage of this approach with this swing low and trying to trade this one, right? And the trader number 2, he has a strong bias to the upside. So for him is a setup, either I'm going to be stopped out, right? Or I'm going to take the profit over here. And the third trader is actively monitoring the position, right? So in case here, right? Here is the long. Here is some kind of the range we have after long being opened, right? We are still trying to hold that low. there is a rally, right? Out of that range, right? So the third trader, trader number 3, who is actively monitoring the position, probably will start to think after the break over here, and with this engulf here, will start to think, it might be the false break. So either I'm taking off the table whatever market is giving me here, or I'm just moving my stop to break even or +1. That's what I told you during the first part. Everyone is going to trade differently these types of possible supply and demand zones, right? Everyone is going to trade different way supply and demand, and that's the beauty, because we can adopt the tools we want to use based on what kind of the trader I am. We don't have to wait for stochastic to cross the line, right? And to wait, because I have to wait because it's a mechanical system. We have to have another cross. Doesn't matter, it's 150 pips lower against me. No, we here with possible supply, possible demand, we can adopt the tools, we can use the tools suitable for us. Okay? Tools suitable for us. So again, trying to summarize this type of the approach with the swing inside the supply or demand. I'm trying to be the front runner, trying to, in that case, front run the possible swing creation, but still, I do respect the whole zone based on the higher time frame, and my stop is under the zone. All right. There is a very, very urgent addition here. What if market is not creating the ideal swing high? And the next candle after we make this high over here is opening, and we just have the Niagara Fall without hitting the zone. All right. I'm calling it unfinished business. And we are going to get back there, most probably. Either we are going to react or no, that's a completely different story. But that's my supply zone from the smaller time frame in relation to the current market situation and what we have from the higher time frame. You want a proof? There you go. Let's try to find the lower time frame, the less reliable it is, but anyway. So how the unfinished business looks like. Let's go to the higher time frame, gonna be easier. How the unfinished business looks like. Supply from the higher time frame, from the daily, intraday price action, swing high creation, close of the candle ideal from our perspective, but the next one didn't even get closer to ideal swing high, right? So working order and market hit that level. I'm talking about the things some, let's call them educators, didn't even know they exist. The second thing, I'm talking about this for free for you here on webinar room, as well as Global Light Forex YouTube channel. But because it's for free, some guys will, it doesn't work. Yeah, go and pay your educator. Next, or maybe before we will go next, if there are any question in relation to this swing high. Again, I'm sorry, I can't see the question from the YouTube, so please join the webinar room if you want to ask the questions. All right, so let's try to find the opposite. Swing low, we had a swing low, we had a unfinished business, so let's try to summarize as a next thing to try to make it recognizable for you, right? Same situation after the post non-farm payrolls, right, over here. But in that case, it didn't work. It was nice demand, possible to finish the business, but simply we saw the breakdown. So again, nor possible supply demands nor unfinished business are working 100% of the time. But implementation and where the particular place on the chart we want to take the advantage of that should work our way. So let's try to find more examples. Let's try to find more examples. So here, but it was a little bit too wide anyway, right? Swing low creation, Riley of that. Now let's try to switch lower. What was the May 24? If we would take that, yeah, it's here probably. So wouldn't be filled here, as you can see. Now let's have a look. Oh, probably we haven't visited that level yet. Yeah, that's gonna be challenge. Yeah, we haven't visited that level yet, probably. Since the rally, yeah. It was very close. So I'm sorry. Let's switch to the higher time frame. Should be easier to navigate. Trying to find these unfinished businesses. There you go. Move to the downside. Swing high creation, but never retested based on what books are saying about the swing. There was a reaction. All right. It was stopped out 3 days later, but there was a reaction, right? There was the reaction. That's what I'm talking about, to take the advantage. If there is such a situation, you might significantly narrow the distance between entry and the stop, and the lower the distance, the faster 3R you are going to get. Let's try to find another one. Let's switch to the lower time frame. I've got information. 12th of June, M30. Thanks, Michał. 12th of June, 12:30. Somewhere here. I'm not sure. Probably we are talking about this one. Yeah, we're talking about this swing creation. Retest and lower, right? Based on the supply from the higher time frame. It's important thing because again, we may try in the middle of the road somewhere here. We can find plenty of these examples, but again, same as I said in regards to the possible supply, possible demand. If you are going to trade each of them, it's not gonna work the way you want, right? Same here. If you are going to try to trade each swing high, swing low, unfinished business, even in the middle of the road, it's not gonna work your way. Okay? It's not gonna work your way. So this type of the approach inside, so we are switching to the lower time frame. We have the supply demand on hourly. We are switching to 15 minutes. We can even try to switch to 5 minutes. That's what I said. Execution on a smaller time frame. Now, the last trick I like very much. approach to the head and most common name is a head and shoulders, but for me, head and shoulder is a topish formation. Inverted head and shoulder is a bottom formation, meaning that if that's the full chart I can see here, right? If that's what I can see on the chart, right? So for me, head and shoulders here, that's gonna be head and shoulder. But if I have a high here and low here, and someone is telling me that we are drawing head and shoulders over here, it's not the right name, right? It's something we can call it, I don't know, something similar to head and shoulders, or we cannot call it head and shoulder, the same, the inverted one, right? At the very bottom, that's the bottom formation, and inverted, and the head and shoulder is the top formation. Now, very important things here, what I mentioned, we can call it something which is similar to head and shoulders. We shouldn't call it head and shoulders or inverted head and shoulders, but it's gonna be very useful possibility to recognize such a pattern from trading perspective. Okay, it's addition in case you want to participate, join the movement. And to be honest with you, with this, what we are going to talk about, it not necessarily has to be in relation to the supply demand based on the higher time frame. It might be used a little bit more free approach possible here. So let's go. All right. In case of this type of the move with strong pullback, right? Okay, the different schools saying different things, right? Some guys will try to take the advantage of the breakdown, and they will immediately try to trade short side based on the breakdown, right? And depends where the stop is. They are either immediately stopped out or a little bit later. What I like with this approach, and the important thing, one more time, the important thing here is that with this move to the downside, we took out the latest demand. And that's only the relation to the supply and demand, right? And you can try to imagine this one as a head and shoulders, right? And usually when you are reading the book, you are selling the neckline. I do prefer, it's not gonna be, I might miss few trades, but again, what we discussed about the swings, it might be similar with this pattern, right? Where the something called left shoulder might be treated as a candle before the top, and the right shoulder as a candle, try to imagine that way, after the top, so this equal highs. So in case of the possible head and shoulders, I like to be, in that case, front runner here, right? We took out this one, we Riley. I don't want to be seller here. I want to a little bit, in case of the head and shoulder, if it's a topish formation, I want to be front runner here, right? Why? There are a few things. If I'm correct here and market will turn around, right? There are gonna be more sellers coming in trying to trade this head and shoulders after the neckline, right? But there are many of things may happen on this right shoulder, right? But I'm going to have a plenty of time to react. So that's the difference being short here and, sorry, it should be lower, and being short on a break here or here, right? Because if you are going to go through some charts, what you are going to see, I wouldn't say very often, but often, is where we should have right shoulder, there are going to be some kind of the megaphone formation. And if there is a megaphone formation on the right shoulder, usually this type of deformation is going to be broken to the upside. In that case, I have plenty of time to decide what I want to do. On the neckline, I can already take partial profit, and I can actively manage my position, right? And because I do research every time, and I did it before, when I see the megaphone formation is created, I can even try to take around this neckline, try to take the advantage of that and go long. The details of that we are going to discuss in the future, not everything at once, right? But what is going on after head and shoulders or something similar to head and shoulders is broken, right? And market is going much higher. And usually we are trying to chase the prices. The most common thing that we are trying to join the party in the middle of the road or closer to the end of the road, right? Some books are saying that you should buy on the retest of the top, right? Join the party. My work may not work, right? Depends where is your stop. I do prefer to take the advantage of these levels again, because that's where was the significant levels before. So trying to summarize these things, let's make it smaller, right? So that was something which should work as a head and shoulder, but there was a break higher. Plenty of people will try to join here, gonna be stopped out. Some will try to join here at the previous stop, right? Once market will bounce, they will move the stop to the entry. They are going to be stopped out. And if that's gonna hold, that's the best place to be in. We can miss few times these trades. But again, the distance between the entry and the close is gonna be on our favor. So it's gonna be narrow. So it's easier to hit 3 to 1 immediately. So let's try to find these setups on the chart. We are going to, this is a bonus, right, today. We are going to discuss it with details during the next meeting next Tuesday. But for now, let's have a look what we have. Just 1 second. So let's have a look what we have. Let's switch to the 1 hour chart. All right. And let's try to work with that possibility of head and shoulder creations or something similar to head and shoulder, this type of the pattern. The thing I got, the people I got the idea from, they were talking about also over under. So this particular one is not mine. I got from colleagues. So let's have a look what we have here, and if we can, and how can we take the advantage of that. Okay. So something we have here which is similar to what we discussed. We didn't quite get there yet when we were here, right? That's the zone we would be interested in. Okay. And you know what? Look, those who were breaking on the neck, buying on the neckline, right? They were probably stopped. They didn't have enough time to react. In that case, I would be stop out immediately as well because of this drop base drop formation, right? Right. But based on this approach, if you like this approach, okay, if you are, so the long would be stopped, okay, and if we want to make the turn around here, right, so this zone right now we make the break here, right? So on the book you are selling somewhere here and you are stop out, right? But I would take the advantage of what we discussed. So we know why we have a top of the range in that case as well, right? One more time. We had some kind of something similar to inverted head and shoulders, but not that it wasn't bottom, so we cannot call it inverted head and shoulders. But we had some move to the downside, lower low, so we made move under the previous low, right? With quick rejection, we didn't retest that level till here. There was even reaction. We had a reaction here, one reaction here, right? So that was the buying point. Okay, one more time. So I want to buy here, not the neckline. So there was so this one is a here. Okay, but it failed. We made below the low of the head, right? Some were selling already here. They already failed. The place where I've been trying to buy is my selling level right now. And this time it worked quite well here, right? As I mentioned, this one you may try to use a little bit more freely, not in relation to the supply demand. And because I've been waiting for a little bit higher levels based on the supply demand, I missed that one, right? Of course, Draghi helped us here, but that's how this particular pattern may work alone. Of course, if you are going to trade each of them, you may try to trade, okay, if we are moving higher in the market, right, and you see something similar to the head and shoulders, so in that case, you are not trading head and shoulder because market is going higher. You are waiting for the break of that pattern, and where we're supposed to be shoulders, you are waiting for a pullback and you are joining the party to the upside, right? That's gonna be your demand zone based on this pattern. So let's have a look if we have anything similar. You can have it here, here. So let's check if it worked out this time. So that would be the shoulder somewhere here, right? It would be somewhere here. Oh, accidentally it worked out. So that's your homework, to do your own research, try to figure it out. So we were discussing many different things today. At the very beginning, we went through what we were discussing last time, what was discussed last time, right? Basic supply, basic demand. And during the second part, we went a little bit more into the some details. I've shown you few hopefully useful tricks. At least if you are going to use one, I'm gonna be glad and happy. All right. Of course, it's easy to show checking the left side of the chart, right? Of course, yeah, I know it's easy to show, but during the another part, once we are going to cover New York Open Live, we will try to implement two things. So we are approaching lunch break. We are going to have another part around the New York Open. So you are more than welcome to join me between 2 and 2:15. We are going to start. Yeah, there's gonna be 15 minutes room. But anyway, New York Open, 2 p.m., 2:15 p.m. CET. That's the starting time, and we are going to cover a little bit of the New York Open, and we are trying to implement what we discussed. Just a reminder, if you cannot join later on, just a reminder, tomorrow, 8 a.m. CET, pre-London Open live market coverage, Global Light Forex YouTube channel. 10:15, 15 minutes ahead of the UK CPI. We are going to cover this, and we start 15 minutes earlier, 10:15 a.m. CET. And then we don't have New York Open live market coverage tomorrow, but we are going to cover live FOMC tomorrow. So you are more than welcome to join me 7:45 p.m. CET, right? 15 minutes ahead of the FOMC announcement. Thursday, 8 a.m. CET, as usual, pre-London live market coverage, pre-London Open, and then 1:45 p.m. we are going to cover live Bank of England. So busy next 2 days. That's it during that part. So we are going for a longer break. Room is open. I'm simply stop sharing the desktop right now. All right, but room is open, and we are going to be back within the next 3 hours. So lunch break. Enjoy the break.